Man, I'm back again to share with you the high probability trading strategy. And as I promised, this trading strategy wins more than 90% of the time. And this trading strategy is based on a concept that is known as hidden divergence. Now, hidden divergence, I'll be using this tool, the high probability oscillator. Okay, and all indicators are lagging indicators. All indicators, including this very high probability oscillator. However, you can use oscillators. Of course, any oscillator can work for this purpose. So what I'm about to share with you is, of course, I'm going to explain how hidden divergence works and a very simple and precise way of entering the market, making consistent profit. Of course, like I also promised, I'm going to show you precise entry and exit points that will make you consistent profit. Okay, so I want you to get a pen, get a paper, and get set to write down some things. Hidden divergence, like the name implies, divergence generally simply means disagreement between price and oscillator, and like I said earlier, any oscillator can work for this purpose. Now, hidden divergence, I'm not going to talk about regular divergence so that I don't confuse you, so I'm just going to go straight to the point and tell you what hidden divergence means. Now, hidden divergence, price is making a higher low. This is a low, this is a higher low. The oscillator should also be doing the same thing, since in theory the oscillator does what price does. It follows price. It is a lagging indicator, so it is logical to believe that if price is making a higher low, this is a low higher than this low, the corresponding part of the oscillator should also be making a higher low. But if price is making a higher low and the oscillator is making a lower low, then it is a warning. It is a warning that this momentum could be diminishing and that price may go up there. Okay, let's look at another hidden divergence. Here, price is making a higher low. This is a low. This low is higher than this low, but the corresponding part of the oscillator, instead of doing the same thing, is making a lower low. It is a warning that the momentum here is diminishing. Hidden divergence is said to be a high probability trade setup, which is one of the reasons why I added it to a part of the high probability trading strategy that I'm going to share with you. And it's very simple and straight to the point. Now, with this oscillator, the HPO oscillator for hidden divergence, I specifically made this to trade hidden divergence. You discover that most of the time, not all of the time really, but most of the time, when you spot hidden divergence, the oscillator also helps you spot it. That's the arrows there, so you don't really need to bother yourself. Now, all you're seeing here is only hidden divergence. I made sure I removed every I did not have to code the regular divergence because I don't want to talk about it. The advantage of hidden divergence is that it follows the trend. It follows the trend. So you want to trade with the trend because the trend is your friend. At least that's what we were told. And the trend in an uptrend, one of the major characters of an uptrend is that the uptrend makes higher highs and higher lows. Okay, and the downtrend makes lower lows and lower highs. Okay, you see that clearly here, lower lows and lower highs. Okay, and having said that, I just showed you bullish hidden divergence, price making higher low, oscillator making a lower low. That's a signal, a warning to buy. Now, to sell, it is the opposite. If price is making a lower low, so notice what is happening here. Price is making a lower high, excuse me, price is making a lower high and the oscillator is making a higher high, it's higher than this and this, then it's a warning that price is most likely coming down. Okay, let's look at other examples there. Okay, right here, see price is coming down steadily from here, and the oscillator is going up. Look at this and look at that. Now the catch with this oscillator is that it automatically draws it, shows you these points. Well, not all of it, but majority of it. Okay, so I'm going to share with you I don't need to with this oscillator, I don't need to really say so much again about hidden divergence or how to spot it, because most of the time you would find that the oscillator would already spot it for you. So let me get straight to the main dish, which is the trading strategy. Now, what is the entry point when you see hidden divergence? When exactly should you trigger that trade? Now, in creating a trading system, you need an entry and you also need an exit. So I'm going to start with the entry first. So I'm going to take one example very typical of what I want to explain. Now, price always tends to bounce off support and resistance level. So this is a resistance level that was broken and price came to retest it. Now, whenever you see a setup like this, price coming to retest in an uptrend, of course price should be making higher highs, higher lows. Anytime you see price going up, coming back to retest the resistance that has now turned support, and you see hidden divergence happening at that level, it is a very high probability trade setup. I'll come again. This is a previous high, price got here and was rejected, then price broke this level upwards, came back to retest the level. Look at that. And around the same period, you are seeing the hidden divergence. Of course it will start from somewhere here. Okay, now at the point where you see that retest, rejection, retest, you may want to consider taking your buy position from there. Your buy position from here. Now, when you take your buy position, that is your entry. When do you exit? Now, your exit should also be precise. Now, if you go online, go on Google, you will see a couple of free range indicators. This is one of them. Now, when you look at the range, look for any range indicator that calculates the average daily range for a number of days. Now, one of the things I would recommend as your exit is to look for the previous 20 days range. The previous 20 days range. In this case, you're seeing an average of 43 pips, 430 points. This is a 5-digit broker, so 43 pips. Now, when you take your entry, your buy order there, your take profit should be 43 pips down there, and you see price doing more than 70 pips. Now, your stop loss should be half of this. So if you're doing 43, then it means you should be doing 21 pips stop loss, 21.3 stop loss, something like that. Okay, that's a risk reward ratio 1 to 2. You're risking 1, you're targeting 2. So let's say you're risking 2% of your account margin on the trade, you're targeting 4%. Of course, 2% risk per trade is more or less like the industry standard. Okay, this is one good example. So let's look for more examples so that this would become clearer and clearer and clearer. All right, look at another one. Very clear, simple trading approach. You see price coming back to to retest a level. After it was broken, came down, look at this hidden divergence. So as soon as price, once you spot any form of rejection here at that level, then that should be your buy entry there. Now when you take your buy, depending on what the 20 days range is, then that is what your take profit should be, and your stop loss, you should consider half of that. Now I'm talking from the point of view of the 4-hour candle. The 4-hour candle. Now if you're trading on the daily candle, on the daily time frame, what you should be considering is double of that. So anytime you spot a setup like that, of course, if you scan through all tradable instruments, you should be able to find something. You should be able to find something, at least on a weekly basis. You should be able to be finding some good trades. Now I'm not saying all of your trades would be winners. What I'm saying is that most of your trades, majority of your trades, a large majority of your trades would be winners. Okay, this is from the point of view. Okay, look at another trade. Personally, I want to trade on the 4 hours time frame. Look at this, price came here, comes back to retest here, okay, and went all the way up. So you want to look at the average daily range as at the time and double it. So that period might be lower than this, but set your stop loss and your TP 1 to 2 risk reward ratio. However, on the smaller time frames, you tend to catch much more trades, especially on the 4-hour time frame. Okay, you once you scout around, you'll be able to see some. Oh, this is, I just want to do this so that I won't sound like one of those regular internet marketers. This is trying to trade with the trend, but with some precision. So you're trading like a sniper. You want to trade, make some good profits, and that's it. Now look at another one. This happened recently. Look at this. Okay, into this region and price, let me take that up a little bit more, excuse me. Okay, notice this, price comes, tests here, and there is a divergence there. You see this arrow there and then pointing up. So once you see any rejection, so to me, I would say here at the close of that candle would be my buy. I would look at what the this is saying, and then I'll take my buy order. My TP should be whatever value I see here, and my stop loss would be half of that. And you see this happening. Okay, and you see this, you can decide to trade as many instruments as possible, but personally I would rather like to look for setups on the major USD pairs, but that is me. Okay, so you can add your own spice to this, and trust me, you'll have a very high probability trade setups, and with this you're good to go. Okay, you don't have to really know how to spot hidden divergence anyways, because the tool here already spots that for you. And okay, look at this, there's a level here, so this interacts with a major level. You want to look out for this, at least a recent level, and you see hidden divergence happening there, and this is a good entry. Once you see a rejection, maybe not this one, but perhaps this, okay, the price bouncing off that level, and you want to take your buy position from there, use this value for your take profit and half of the same value for your stop loss, and you see price going up nicely, and you make your very cool profits. Okay, note that this is not the holy grail. There are a few times when this may not work, but those are very few times. All right, so I'll leave you to download this, try it on a demo. Go to the link below this video, download it, and then try to spot it. It's not that difficult. Of course, I've taken the burden of spotting the divergence off your shoulders. So even if you don't spot the few ones, yeah, the ones that these spots would sure make you some very consistent profit. So go search for high probability trade setups, make good profits, and I wish you all the very best.